Let's go across to our guest, Prashant Khemka, the founder of WhiteOak Capital Management, is joining in. Prashant, welcome to the show. What are your own thoughts on how earnings season has panned out? Do you see more downgrades and upgrades? And if yes, what are the kind of sectors that you continue to be bullish on post the earnings season?
Hi, Sonia. Thanks for having me here on this panel. Thanks for the question. So I think as the chart or the data just showed, yes, a lot of companies outside of BFSI had very robust results, but outside of BFSI, there were in this quarter a couple of things going on. See, inflation in raw materials has been coming down, but a lot of the companies had higher priced inventory, raw material, which were bought in earlier quarters, which they're working through now. But they, in their end pricing, they have to reflect what is more in line with current raw material prices. Yeah. So the prices are lower, but RM prices that they're using from the inventory are still higher, and hence there is a margin compression, but that is a one-off margin compression. That's what the companies are saying as well, and it should normalize for most of them some point during this fourth quarter, or for some companies in the first quarter of next fiscal year. So that's been one of the key reasons for lower earnings for many of these companies. The other reason, more fundamental, yes, there has been it seems some slack in consumer demand, and that's across urban areas as well as rural areas, but maybe a little bit more at the more economy end or the value end. Because the impact of inflationary pressure is felt more at that economy or the value end of the curve. So for those two reasons, earnings have been softer for different market corporates in the market.
Okay, well, stay on, Prashant. We'll come back to you. There was another big story this week, and it's a deal that we told you was in the works, and it finally happened this week. Auto component major Minda Corp acquired about 15.7% stake in its rival Pricol. Remember, CNBC TV18 had reported earlier in the week that Minda was on the prowl for a stake in Pricol through a reverse book building exercise, and that happened. Nimesh, you were the one to tell us, but so much to and fro. We thought it would be a takeover battle. Yeah. Finally, it's just a financial stake. But tell us a lot more about what you found out.
Well, Sona, it's too early to say it's final. This is just the first step according to me. So in the first step, Minda has acquired 15.7% in rival Pricol. They've paid 400 crore rupees. So I guess even the Minda investors are going to ask the management on what is the rationale behind it, spending 400 crores for a minority 15% stake in a rival company. So that's something we need to see further. In fact, Minda has gone on record saying that this is just a financial investment and they should be treated as normal investors, what the other shareholders are. But I guess there is a road ahead for this deal, so to speak, and that's what we'll have to track very closely. I was looking at the shareholding pattern of both these companies, Pricol and Minda Corp. In Pricol, the promoter holding is very low at just 36%. So that's going to be a big risk for the Pricol promoters. The mutual fund holding is 4%. FI owns close to 12%, and there is a private equity investor who owns 5.7%, which is PHI Capital. And interestingly, that same fund owns 5% in Minda Corp as well. The disclosure will be important as to who are the large funds who participated in today's reverse book building and given 15% stake to Minda Corp. The next step could be whether they will go and talk to Pricol promoters and ask to buy them out, and whether there will be an open offer as well. So that's the second step to watch out for. I guess it's going to be this is just a start, is what I understand. Need to see how things pan out. But I guess Sona, you've tracked the sector so well. What are the key synergies that benefits? Because I was looking at the balance sheet of Minda Corp as well. I think they've spent most of the cash that they had in today's 400 crores. Yes. But the fact is, for a 2,400 crore market cap, even if you reach to 51%, they need 1,200 crores. Do they have enough cash to fund this and take this over?
In fact, on their books, Minda Corp has just a little over 300 crores, which is hard cash on their books. And as you said, that's not even enough to fund it. True. But give and take everything, I guess, from the accruals that came in Q3, etc., they would have made that amount available. But I think it's a strategic fit for them. Yeah. They eventually, whatever they plan to do with Pricol, whether it's a hostile takeover, whether a complete acquisition, Pricol is a very strong company in, these instrument clusters, which are the various display displays and indicators that are used in a car. And Pricol is the second largest global player in this instrument cluster space. They also have provide fuel level sensors for 2 and 3 wheelers. So it's a very strong business. In the 9 months period, the earnings have also picked up quite a bit. It's a debt-free company. Not just that, they have a 50% market share in 2 wheelers. They have a 70% market share in commercial vehicles. They also do various things for electric vehicles. They provide connected vehicle solutions, telematics, onboard navigation. And as we know, this is a space that the Minda Group is very aggressive in this whole EV space. Not just Minda Corp, Uno Minda as well. So in that context, it's a strategic fit for them. Now, there are of course many positives. Pricol has free cash flow of about 100 odd crores. So in a sense, this is a strategic fit
but
for
what could be
Minda.
the merged entity look like? I mean, if they combine together, eventually if that happens, what could be the merged entity look like, and what could be the key benefits for someone like a Minda?
So, as I said, Minda is already available. They already provide instrument clusters. Now, Pricol will be adding, of course, their own geographic as well as domestic reach to Minda Corp. And the combined entity will look much better. It is anyways a cleaner balance sheet. Sure. But, I wanted to just toss this question to Prashant Khemka as well. Prashant, I don't know if you've tracked this deal that has happened, but in general, how are you feeling about auto ancillaries? The guys that have a global exposure are finding it a bit challenging, but the domestic piece is looking very strong. Your thoughts?
Certainly, it's hard for me to comment on individual companies, as you know, and I have, to be very honest, not followed these very closely, this specific deal, to be able to comment. But you are right, because of the challenges in a lot of the auto anchs companies do export to Europe. And as you might know, some of the companies who reported over the last few days have called out the weakness in European demand. Particularly, there is some destocking going on as well. So there are several undercurrents. One, the demand itself is a bit weaker. Secondly, the channel is destocking in Europe because the uncertainty around RM prices, raw material prices, and availability due to supply chain disruptions, both of them are reduced compared to 3 to 6 months ago. So 3 to 6 months ago, you had channel building inventory in, let's take Europe as an example. So now the end demand is somewhat softer, but importantly also the channel is destocking to normalize the inventory, which is resulting in weaker demand for the Indian suppliers.
Guys, when is the last time you heard a hostile takeover? You guys remember which was the last time? When you guys were talking about hostile, I mean this.
Oh, hostile.
Not a friendly
Again,
one.
I think it's too premature to say it's going to be hostile. Let's see. This is just a first step. Whether they move ahead, whether Pricol agrees for it, don't agree for it, whether they give up. There are too many moving parts.
When was the last time there was a hostile takeover?
I don't think India has seen any hostile takeover, so to speak.
I mean, hints of it, right? Adani, NDTV, for example, was one maybe. L&T, Mindtree, but that is some time ago. Which also had hints of it, not like the US, of course, where it is very brazen. But as a journalist, I mean, this is interesting stuff, right?
Interesting, absolutely. Takeover battle, right?
Okay, we'll take a quick break here, and we'll focus on the auto sector, which seems to be in top gear. The big gainers there, and how they fared. Prashant Khemka is with us as well, so all of that in just a bit when we return.
Welcome back. You're still watching the Editor's Roundtable, and we're dissecting a lot of the companies, the stocks, the sectors of the week. But now I'm going to talk about the sector of the year so far. Of course, it's still just 1 month into the year, but auto stocks have been in top gear this year and have been some of the top gainers on the Nifty. So let's take a look at them and find out, what the way forward could look like. Now, the biggest gainers in 2023 so far: Tata Motors up 15%, Bajaj Auto up 8%, M&M up 8%, and Maruti up almost about 6% odd. So far, there's been a bit of a comeback in the auto space. Now, what are the triggers? The earnings this time were very strong. Most companies beat street estimates, and there are earnings upgrades that have come in as well. The companies are gaining from a low base of FY22, as well as there is benefit of softening commodity prices and operating leverage as well. Now, here are the companies that have beaten street estimates in Q3. There's Tata Motors, M&M, Maruti, and Bajaj Auto. For Tata Motors, as we know, it reported the first profit in the last 2 years. For M&M, it achieved the #1 revenue market share for 4 consecutive quarters in a row. Maruti recorded margins above 9% for second in two consecutive quarters, and Bajaj Auto saw record high EBITDA in this quarter. So what's the way forward? Motilal Oswal put out a note where they said that the auto sector in their coverage universe saw 22% growth on the revenues, and the top earnings upgrades in FY24 are expected from Tata Motors and Bajaj Auto. Tata Motors, they've upgraded earnings by 19% and Bajaj Auto by 6%. So Prashant, I wanted to toss that question to you as well. There's a bit of a recovery we're seeing after a long dry spell for the auto sector. Has the time come to raise the allocation in your portfolio towards auto stocks?
So see, also raising is also relative, right, where you're starting from. So I think the team already has a fairly healthy allocation to the auto space, and they continue to evaluate though. And I would, from what I understand, they have increased the allocation even in the last 2-3 months. So from here, I don't know how much room, because we don't go, gung-ho on any one particular sector at any given point in time in a very balanced portfolio. But auto sector, where the valuations are today and the prospects are, yes, the team is finding several attractive opportunities in there.
All right. Hi, Mr. Khemka. So the cement space, that's been very, very exciting. And you all were early investors into the Adani Group stocks. That's now the Adani Group. So that's Ambuja Cements. I think you all had a large chunk in there. The stock re-rated, but now it's back towards those similar levels, 350 odd. What's your take on the stock from here on? And are you all continuing to hold on to the position, or have you all lightened it a little bit?
Nigel, in general, as you know, I can't talk about any individual stock. To talk about something that is so volatile or sensitive of late is almost, obviously what is not possible is not possible, but I'm sorry, I hope you understand, won't be able to talk about a particular stock.
But let's talk about the cement pack then on the whole. Is it still looking up? India is going to be growing well, and cement is one of the proxies out there. The problem is in terms of pricing. Your view from here on the cement space itself?
Yeah, so overall, see, if you believe that the economy is going to stay robust and all this infrastructure spending and the housing demand, which has been, strong or decent, I would say, for the last several quarters or years, then cement demand is continuing. Cement is a very regional commodity, very local commodity. So you have to analyze the demand supply more from if not state to state, then region to region, the north, the east, the west, south, and all, which our team obviously has done and has accordingly selected the investment ideas. We are constructive on the overall cement space. In fact, we are ideas to invest there.
Prashant, the slowdown, you said, you alluded to, of course, one is the margin issue because of high inventory, etc. But you also alluded to some slowdown, which is very visible, which is very clear. What will reverse that, in your opinion? And if that is just starting, I mean, that may have some room to run, right? One thing I can think of, Prashant, is elections next year, right? So maybe spending ahead of elections, that puts more money in the hands of consumers. I don't know. Your thoughts?
Certainly, Prashant. No, very valid question. And when companies are asked this question by investors at large or ourselves, they sound a little more, like optimistic and hopeful rather than any concrete answer. Now, there could be that some of the reasons they're explaining or giving for the slowdown in the December quarter are legitimate in that, see, Diwali was a little bit earlier this year than last year. This year, Diwali fell in October versus the previous year when it was in November. So some of the demand that was pulled forward into the September quarter. That's one of the reasons that they're giving. The wedding season was extremely light in December this year. Several companies, particularly those who are exposed like jewelry companies and other companies which are exposed to the wedding demand, have shown weaker demand in December, but they have called out a much sharper rebound in January, February, because there are a greater number of dates. There are approximately 40 days or so, 35 to 40 days in every wedding season from November to February. And they usually tend to be evenly split between November, December, and January. This year it's been more in the next quarter. So if those things do come back, and even those that are not directly related to wedding is a very large industry in India and has an effect on several consumption related sectors. So that could itself bring back some of that growth. Channel inventory normalization once it runs through sectors, can also bring back some of the demand.
Okay, folks, it is that time of the day when we will wrap up our day and our week. So thanks a lot for watching and thanks for joining us through the course of this week. We wrap up with Editor's Roundtable. Have a great weekend. See you again on Monday. Prashant Khemka, thanks a lot for joining us as well.